Welcome back to the Financial Symmetry channel. This week, we are diving into tax prep and or tax planning, right? It's both of those because it's organizing your documents in a way that can help you maybe jog your memory on certain things that can be forgetful through the year. So let's dive in, Grace, to that first one there. We've organized this into 4 different categories that you can think through. And the first one is reviewing your 2021 life changes.
Right. So the first step for me as we enter into tax prep season is really getting an understanding of what did 2021 mean to you, and were there any material life changes that should be carried through to your tax return? The first for me is the question is, did you move during 2021? That could be as simple as moving residences, or it could be as big as moving to different states. You want to make sure you update that information on your return, as the address that is recorded on the return you file is important in a way, because if the IRS needs to get in touch with you, they're going to reach out to the address that you file on your 2021 tax return. Question number 2 is, did you change jobs? And if you did, there's an understanding that there are going to be multiple W-2s that need to be incorporated into your return. And as a part of a job change occasionally is, did you roll over an old retirement plan, either into your new 401k, into a rollover IRA? Whatever that account landed into, you want to make sure that while the event in and of itself is not taxable, it is something that they're going to issue a tax form, a 1099-R typically, and that does need to be carried through onto your tax return. And question number 3 is, were there any dependency changes? And that can come from welcoming a new child onto your tax return, or perhaps a child aged out and they've gone out on their own and started on their own career.
Yeah, with the craziness of real estate and the job market in 2021, there was a lot of change in both of those areas. So it's certainly important to keep an inventory there. And then both the W-2s, a lot of times you'll see duplication there of some Social Security tax. So just want to make sure you get all that accurately entered, or to your preparer to enter. And the second item, Grayson, that you've organized here is, what should we be on the lookout for in terms of documentation?
So there are going to be some specific documents to 2021 that are a little bit unusual. The first is going to be a letter you'll receive in the mail, if you haven't already, from the IRS, and it's for the advanced child tax credit payment that you may have been receiving since July on a monthly basis. And that letter is going to allow you to determine how much you've received year to date or through the end of 2021 that'll be reconciled on your tax return. And the other letter you may be receiving has to do with the third stimulus payment that you likely received in March or April if you were eligible. So those are 2 documents that are a little bit abnormal that you may not have received or you wouldn't have received in years past. And then there's the usual documents, your W-2s that come from your employer, 1099s you may receive as an independent contractor, 1099s from your bank to report interest, from custodians to report dividends and capital gains, K1s if you are a partner or you are part of an S corporation, 1098s if you have a mortgage or tuition payments. A lot of different documents to be expecting in the mail over the next couple of weeks, and make sure you're organizing that as it comes in, whether that be digitally or in the mail. I find it becomes a lot easier if you have a record of everything that you can either incorporate into your own return, or if you're tax preparer, to forward the information along to them.
Yeah, and this could have been, these documents could have been created by tax planning maneuvers that you did in 2021, like a Roth conversion, right? Or a backdoor Roth contribution / conversion. Could have been a tax loss harvesting that that shows up on your 1099 that you could use with specific, maybe individual stocks you've had in your account, or qualified charitable distributions if you're over 70, right? Those don't always show up on a 1099 from a custodian. So important to keep everything in order there and let your preparer know when you're getting those documents together. And then a lot of people are antsy, ready to get this return moving, right, Grayson? So what are some things we can do in the meantime, waiting on documents?
So as you are, checking your mailbox on a daily basis, your email for those documents to start coming through, some things that you can start to kind of proactively do to make tax filing season maybe a little bit easier on yourself. And that is, start collecting your charitable receipts or going through old transactions to capture charitable giving you made throughout the year. Gather property tax payments that you made either for your primary home or perhaps for your numerous vehicles you may have. Estimated tax payments. So if you're making quarterly estimated tax payments, start to jot those down if you haven't already. And that's going to be something that's important to incorporate onto your return. Child and dependent care receipts. So you may get a letter from your child's care provider that outlines how much you paid throughout the year. If not, you want to start to capture those expenses that you paid, because that will be something you can incorporate onto your return. And then lastly is those business and rental expenses. So hopefully you've been diligently capturing that throughout the year. If not, maybe this is a good reminder that it is something you should be a little bit more diligent about throughout the year capturing, so that it's just easier to gather. With either, whether it's a business or a rental, there's so many different cash flow items that do need to be incorporated on your return that it's hard a lot of the time to go, peel back through your entire previous tax year. And so starting to put that information together now as we enter into tax season, it just lengthens the amount of time you're going to have to pull all of that information together.
Yeah. And then those contributions that you might be able to make, there's some things that you can still do right after the end of the tax year. So,
right. Yeah. So you have a kind of a variety of different accounts you may be able to contribute to for the previous tax year. Things like Roth IRAs, traditional IRAs, if your income falls below the phase out range, SEP IRA, if you have business income, that may be an opportunity to reduce your tax burden. And HSA contributions, if you have a high deductible healthcare plan, can still be made through the tax filing deadline for the previous tax year.
all good things to discuss with your tax preparer if you have one, to see if that could work in your situation. That's something we look at for our clients often throughout the years, is trying to find tax planning opportunities, right? Financial advisors should be doing more for you than just looking at a portfolio. And that's something we try to take into consideration with our wealth management clients, is looking at the whole picture and finding areas to make you better off in the long run. So the last area here, and some of that is related to this idea, right, is you have some time when you're filing your tax return, right, Grayson?
Right. So the past 2 tax years have been unique in that the filing deadline was automatically extended due to the pandemic, push out a couple of months. So you just kind of had this natural alleviation of your timeline in a way. For this year, currently, it is still set for the middle of April for your tax filing deadline, but there is the possibility of filing an extension. Everyone can file an extension, which actually pushes the deadline out to October 15th. And to me, it's often kind of a taboo thing to talk through, is that people want to get it over with. They don't want to extend the burden of filing their tax return. But in a lot of cases, doing so not only reduces the stress that can come with having a tight timeline, it also allows all of your tax information to be received. So it reduces factual errors. It reduces things that may come up that they're just some late received documents that may lead you to actually need to file an amended return. So it's taking a little bit of additional time in filing your return. But one important thing to keep in mind is, while you have an extension to file, that is not an extension to pay. So any tax that may be due, you kind of want to go ahead and mock up a return prior to extending it. So you get a sense of how much tax is going to be due when you actually go to file your return. And you want to make that estimated tax payment prior to the filing deadline, even though you have up to an additional 6 months to truly file the return.
Great tips on helping people get organized. And that's, if you're a Financial Symmetry client already, we know there's a lot that aren't, that watch our channel here. But if you are, then of course you have access to Client Center, and you can upload documents in our document vault. And certainly if we prepare your tax return, that's the best way that we've been able to handle that over the years. So as you move into this season, hope this is helpful in helping you gather those documents. Maybe it'll be helpful in the years to come for 2022 if you're gathering documents already. Or thinking about maneuvers, I should say, for the next tax season. Anyway, we do these episodes every 2 weeks. You can check out many other videos below and/or our podcast. And if you don't want to miss the next episode, you can subscribe, and we will talk to you again in 2 weeks.